Egyptian President Abdel Fattah el-Sisi came to power and quickly called for Egyptians to open themselves up to austerity, including the end of oil subsidies. Burdin Hickok, senior global investment strategist and oil and gas consultant, joins me with his thoughts on how far such a get-tough approach has gone with the country. Now, ending the oil subsidies put in place by predecessors, of course, is one of the first overdue, frankly, economic reform efforts. Burdin, the World Bank says that this move would reduce the deficit to 11% of GDP. Do you think that we've seen such tangible gains?
Al-Sisi, I think, just got lucky. He's reducing the oil subsidies just as the price of oil is dropping tremendously. The impact on the populace will be mitigated to a certain extent because oil prices have come off. Their local prices will come off as well. Now, from a budget standpoint, the assumption was 11%. They are targeting for 2015 around a 9% budget deficit. So clearly this is helping tremendously. And again, from a long-term perspective, if they can get their budget deficits lower, can they get them down below 5%, below 3% of GDP, they would begin to look like the best government in the Middle East.
Syria, what's going on there? How is it going to impact Egypt's prospects for growth?
I don't think directly it's going to be a major impact on Egypt. Again, I'm more concerned about right now. I'm more concerned about the political and the potential for a Syria that eventually perhaps collapses the current government. What is going to be the new world in Syria? Will the new world be pro-Western? Will it not be pro-Western?
We know that Egypt, of course, has already gone to the bond markets with much success. But as we talk about more dramatic economic infrastructure development, will Egypt have to go back to the markets in this direct investment way?
Most likely. I think you're absolutely right. Increasingly, their oil production and gas production is going domestically, so that's a less of a source of foreign exchange. Yes, they continue to have a budget deficit, and they still have tremendous infrastructure needs. So they're going to need to go into the international bond markets. They're going to have to go to their neighbors. That's my one concern about some of these large-scale developments that are focused on the Suez Canal or focused on new capital, new Cairo. They are not. This is money that's not going throughout the entire country on roads and bridges, schools throughout the country. That's money not going into those areas that may well need it more from a future stability as well as growth standpoint.
You advise, leading companies on global investment strategies in the region. Tell me, who are they more afraid of, the Iranian investment prospect or Egypt?
Up until now, the world really couldn't do much in Iran. So that's going to be opening up. There may well be today, from a pure capital return standpoint, perhaps better return possibilities in Iran. However, this goes back to the political issue. There may well be more comfortable politically with Egypt than with Iran. I mean, we're talking about a large unknown in Iran. We don't know how Iran is going to handle international money. They've been out of the markets for almost 30 years. That's a different, much more hesitation, I think, on the Iran part, even though there's massive opportunity, and mostly in the oil and gas area. Egypt has a more diversified needs, and like I said, a better history. So it's very possible that Egypt can, in face of growing Iranian needs for capital, Egypt can still be competitive, primarily because of its history, familiarity with the West, clearly a pro-Western government. So those factors would be more enticing to more institutional money.